Up until recently, if you're Canadian and you want to buy American company like Amazon, Google, Facebook, and all those company or Goldman Sachs, the only way to buy this stock, you have to actually trade your Canadian dollars to American dollars, and then you can buy those stocks, or you can buy through ETF. But there wasn't a way to buy this stock directly. You know, it was impossible. But of course, if you live in the US and you want to buy a company in China, for example, Alibaba or JD.com, you can buy those stocks through something called ADR, or American Depository Receipt. You know, these American Depository Receipt, they were introduced with the JP Morgan Bank in 1927. So in 30s they become more popular. You can buy a British company, you know, all the global company from China, from the Europe, from Australia. You can buy them in the US using US dollar. But we Canadian, we did not have this ability. We were not able to do that. The only way to buy these foreign stocks, we have to actually buy an ETF, as I said. But recently, of course, one of the major bank of Canada, it's CIBC, has introduced something called CDR, or Canadian Depository Receipt. So and then this is actually on their website. Buy US stock in Canadian dollar. That's one of the advantages. So instead of you buying, you want to buy Amazon, you can just use your Canadian dollar and buy these stocks. So global investing, these are the pitch. Why do you have to, what's the advantage of actually having these ADRs? So global investing, just more Canadian, of course. Get exposure to global company without worrying about exchange. That's one of the, that's one of the hardest thing. You have to actually exchange your currency to buy these stocks, which of course eat into your profit, because every time you do exchange, you get charged about 1 to 3% just within exchange rate. So that's the first. And the second thing, what would you wanna own the ADR rather than going to buy Amazon and exchange your currency? Same stock, less risk. We'll see the performance and why they say less. Same stock is literally same stock, because the ADR is exactly just like buying another stock, but it's just a receipt. It's a structure which allow you to buy this, using your own currency. So CDR have a built-in currency hedge, right? Canadian hedge, and this means your return depends on the performance of the underlying shares, regardless of currency fluctuation, providing greater diversification while mitigating the additional risk associated with the global investing. So you don't have to worry about the Canadian dollar going up versus American dollar, right? So fractional ownership of easy. So because the way the ADR works, so right now, for example, the Amazon, I think is about $86, but ADR Amazon right now is only 11 because it's more of a fractional ownership. The initial price per CDR will be approximately $20. In comparison, share of many largest company in the world trade at a price significantly higher, some trading even above 3,000 USD. As an example, this means CDR make investing in these companies more accessible to average retail investor. So we're gonna go to the example. So this is one of the advantage, and another advantage on the company, the currency. Each CDR is equivalent to owning variable number of underlying shares. This represent by CDR ratio. The CDR ratio is adjusted on a daily basis. So you don't have to worry about, like, if the US goes up versus Canadian, you still have the advantage and you're still going to make your money. So let's see the CDR. Let's go to directory, see which ones are these. So currently CDR, we only have 30 of them. So we have AMD, which Advanced Micro Devices, Alphabet, Amazon, Apple, Bank of America, Berkshire Hathaway, Cisco, Coca-Cola, Cisco, Goldman Sachs, Home Depot, IBM, JP Morgan, MasterCard, McDonald's, Meta, Microsoft, Netflix, Nike, Nvidia. We can keep going to number 2, page number 2. We'll see more of them. PayPal, Pfizer, Salesforce, Starbucks, Tesla, United Healthcare, Verizon, Visa, Walmart, and Disney. So those are the 30 Actually, we have 30 of them. These are only 40. If we go to next page, you can see more of them. But anyways, so you see here it's 21 of 30. If you go to cdr.cibc.com, you would see all the list. One thing I want to mention is, so you just have to know the difference between, so let's say you're going to buy this in one of your brokerage, whether using your bank or you're using one of these discounted brokerage like Questrade or Wealthsimple. You just have, most of them have the same ticker. This is the ticker symbol that's on a New York Stock Exchange, which you can see here, and this is a NASDAQ. You see SPUX, which is a Starbucks, is the same, pretty much the same ticker symbol. But some of them, they have a difference. For example, Visa on NEO is actually Visa. On the NYSE, New York Stock Exchange, is only V. Right? Walmart is the same, Disney is the same. So there's a very little change difference. So you have to be careful when you're trading these stocks. That's all the difference. But apart from that, pretty much the price and everything is the same. Bank of America, for example, you see here is BOFA, and versus the actual stock itself on New York Stock Exchange is BAC. So those are the kind of little minor minuscule differences that you have. Coca-Cola, for example, is Cola, and we have KO. Costco is the same, Goldman Sachs is the same, Home Depot, pretty much most of them they're the same, except with the exception of very few of them that have distinguished different in their ticker symbol. So that's it. So one of the easiest way to invest in this stock, I mean, if you want to invest in one of the largest American company using your Canadian dollar and very cheap, you definitely have to go with this one. I personally actually recently started my portfolio, building my portfolio using this and I'm going to reveal my portfolio soon. If we go to an example before I close this, by the way, this is Money Man channel, so if it's the first time, please subscribe, make sure you like this video, and share, because I want to grow my channel, and this is a way to support me doing all this research. So let's go to an example. For example, let's do Alphabet. So Alphabet is $15 right now on New York Stock Exchange. This is ADR. Look at that, it's only $15. So that's a really cheap and reasonable. But if we look at the actual Amazon on the NASDAQ, is about 88. So it's almost a fraction of that. So it's pretty good. I mean, think about this is 88 USD. So that's about almost more than 100, in 20 Canadian, right? But here you want to get $15, you get to buy this stock. If you look at the performance, you can see here today it was about 60.66, and we can see the actual Google on the NASDAQ was about the same price. Right, was about 46. We have to understand also there's kind of currency and all that stuff like that. But if you look at the performance of the chart, we can see they're pretty much the same, similar. All right, we can see here the daily's average P ratio and all that stuff. They're all the same. We can go there. So you can go there. You can see the chart there. Look at that. It's pretty much the same as this one. Same performance. Right, so there's no difference actually. So there you have it. Also, if you want to buy American stock using Canadian dollar, now you can do this with CDR, not ADR. ADR is American Depository Receipt. We have CDR, which is Canadian Depository Receipt. So if you have any question, if you have any comment, do you like this? Would you invest in this? Would you consider investing in this? Any comment you have regarding this, please let me know on the comments below. Thank you very much for watching. Till we meet again. Bye bye.